It's a great honor to speak after Governor Roll, and hearing what they did in the Bahamas is fascinating. I'm just going to lay out some of the background, some of the basics, really, in my initial remarks, and then we can get into a discussion in the Q&A part of the session. So, the question here is really, will CBDC really change the way we use currencies across borders, and what are the macro financial implications of that? Now, clearly, it's not at all obvious that CBDC can be used across borders. There are a lot of impediments to that, and we can dwell on that during the Q&A. Again, for the purpose of this presentation, I'm just going to assume that CBDCs can be used for cross-border payments. You might be interested to know that the FSB just put out a roadmap to enhance cross-border payments, and part of the roadmap presents improvements to the current international system for cross-border payments, and part of the roadmap presents more forward-looking solutions. One of those is the use of CBDCs for cross-border payments. So there's an international task force that's actually going to think about whether that is feasible at all, and if so, how should that be designed. But anyways, let's just assume that CBDCs can be used across borders. What will happen to the use of currencies? Now, of course, why do we use currencies across borders? Well, to pay for goods and services abroad, but also to hold and transact domestically. That's known as currency substitution or dollarization. So which currencies do we use currently? Well, there's a variety of reasons why we use a foreign currency: because of the stability of its value, its efficiency as a means of payment. It has to do a lot with the issuer country, whether the currency is fully convertible, whether it's used in trade, the depth of markets that are used for risk management, the stability of institutions, the rule of law, etc. It also has to do with the recipient country, the monetary stability of the recipient country, the rate of inflation, the volatility of the exchange rate. And then, of course, it has a lot to do with network effects. The fact that I hold the currency that others use makes that currency more useful to me. And those are really the forces that determine the use of currencies, of foreign currencies, of currencies across borders. Now, of course, the question is whether digital currencies, and CBDC in particular, has new features that might accelerate the use of new currencies or tip the balance of international currency use. And CBDC specifically comes with very low transaction cost, ease of access, multitude of digital features, and perhaps even to some extent bundling with other financial services through platforms. So with that background, what are the implications, the macro financial implications of the use of CBDCs and more generally digital currencies across borders? So it's very hard to know. We don't have a crystal ball. So we can think of three scenarios. One scenario is the niche use of CBDCs for, say, remittances. So a specific corridor is especially costly and where access is difficult. We might imagine CBDCs being used just for that around the world. That's scenario one. Scenario two is a more widespread use of CBDCs in countries with weak currencies and high rates of inflation, perhaps weak institutions. So that's the dollarization, currency substitution scenario that I just discussed earlier. And then the third scenario is, of course, the widespread use of multiple CBDCs around the world. So we have a multipolar world with a few CBDCs being used as reserve currencies. What are the implications of that? So the first implication I'd like to speak about is monetary policy. And of course, we currently have a situation where about 18% of countries around the world have a share in deposits of foreign currencies bigger than 50%. So that's already, the context, today's context is already one of relatively widespread currency substitution in many countries. And of course, we also know that the transition towards high currency substitution can be rapid beyond a certain threshold, and that currency substitution can be persistent in countries. We also know, of course, that that induces a loss of monetary policy control, especially in countries where whose business cycle is not aligned to the business cycle of the issuing country. So currency substitution can be a problem. Clearly, we don't see it as a big problem in the niche scenario, but we do see it as a problem in the widespread currency substitution scenario, the second one, and to some extent in the multipolar world as well. Now, in terms of monetary policy, we also need to understand that widespread use of CBDC abroad can also be an issue for the issuing country. There can be large swings in capital inflows, potentially in exchange rates of that country, large swings in the size of the balance sheet of that country, and potentially on asset prices. So issuing countries are also going to be careful about the international use of their CBDC. Now, there can also be financial stability implications. First that comes to mind clearly is run risk. So the availability of a foreign CBDC that is considered stable value and can be easily accessed can lead to run risk away from countries, and that's clearly a risk. The other risk that is related to currency substitution, so more applicable to my second and third scenarios, is instability in the banking system due to currency mismatches on banks' balance sheets, and potentially the amplification of a global financial cycle as currencies are used in a greater fashion abroad. And so generally loss of control over domestic financial conditions, which can also be a problem for policymakers. Now, we also have to recognize that from a financial standpoint, the greater use of CBDCs could lead to, could lower cross-border financial frictions, so that markets can be deepened and more integrated across borders. That's also a possibility. So in terms of reserve currency holding, I think our main takeaway is that we continue to expect changes to be relatively slow because of the importance of the structural forces that I discussed earlier. The importance of institutions, the importance of market depth. Nevertheless, there is the possibility that a rebalancing towards a more multipolar world in terms of reserve currency use could be accelerated by CBDCs. And of course, that might be a good thing. The fact that we have a greater supply of safe assets and more competition between reserve currencies, at least among the academic community, is usually seen as a positive. I'd like to just end with one consideration on terms of policy responses. So what if you're worried about currency substitution? What if you're worried about financial stability risks from a foreign CBDC becoming available in your country? There are a variety of solutions, of course, to choose from. Number one, I think it becomes all the more important for countries to lead sound macro policies, both monetary and fiscal policies, get their house in order. That's been a mantra, of course, of IMF policy advice, and it's all the more relevant in this case. And this was reinforced by various speakers at a conference we held recently during our annual meetings. But I'd like to speak a little bit about capital account restrictions. As you know, most countries around the world implement some form of capital account restrictions, and that is true also of advanced economies. And the question is, with the existence of digital currencies and central bank digital currencies, will those capital account restrictions be circumvented more easily, or will they be, on the contrary, implemented in more targeted and efficient fashion? The jury is still out, and we need to figure this out. I think the example that I could bring to the table, a very simple one, is of a city trying to preserve its historical center, and you'll see why this makes sense. And this struck me as I was walking through the city center in Florence, which is my hometown in Italy, and they've installed all these cameras in the streets that lead to the city center, and the cameras take pictures of cars, and that limits traffic in the city center. Now you introduce an e-bike. And there are two things that can happen with the e-bike. The first thing that can happen is that people with the e-bike whiz through close to the wall, perhaps under the cameras, and are not photographed, and then you get a crowded city center. The second thing that can happen, though, is that you install a GPS chip on the e-bike that doesn't allow you to park the e-bike in the city center. And so the first scenario is, of course, we circumvent regulation with the e-bike. The second scenario is the use of technology so that we implement regulation in a more targeted and efficient fashion, and we continue to regulate traffic in the city center. So, and that's exactly what we're looking at now with digital currencies. Can those be designed so that we can implement capital account restrictions more efficiently, or on the contrary, are they a source of circumvention? So I'd just like to end with a call for cooperation, international cooperation, and I think it's to the extent that we want digital currencies to be used as an additional channel for cross-border payments, so we're going to have to scope out certain technology standards, certain regulatory standards, legal standards for these currencies to be used across borders. Clearly, there are spillover effects that I discussed on monetary policy control, on financial stability. To the extent that there are spillover effects, there's the need for international cooperation to discuss those and to discuss solutions that are good for the community of countries as opposed to just the issuing country. And thus, it's very important that we offer a table for countries to come around which countries can gather and discuss these issues of spillovers on monetary policy and financial stability. And to that extent, the fund is very eager and willing to help the international community organize such discussions. So with that, I'll send it back to you. And again, and of course, I just wanted to, should have said this at the beginning, the disclaimer, the usual disclaimer holds. These are my personal views and not necessarily those of the fund or its executive board. Thanks very much.